Hey everybody, it's Will here. I'm going to do a quick price action study today on the NASDAQ. Today's August 26, 2021. This isn't meant to be a, watch this 2-minute video and walk away and you can recreate this kind of trade every single day. I just want to give you a starting point that may, pique your interest and inspire you to look into price action concepts. And down below I'll be linking some content that can help you do that. Some concepts we're going to go over in this video are going to include overnight ranges, liquidity sweeps, and Fibonacci for trade entry and targets. So just a heads up, I didn't take this trade myself today, but there is definitely a value in going back on the session and seeing what you could have done differently. So let's dive into it. Alright, so first, pull up this indicator. This is going to be Range Box by Nephew Sam. I'm not sure, I think these are the default settings, but I'm not entirely sure. What this does is it establishes a high and a low and a midpoint of the first portion of the overnight session. So what's important about this is that you can see here, especially with the NASDAQ in particular, you get a lot of sweeps at both ends before we move in the opposite direction. So you can see here we swept the bottom and then ripped to the top. You can see here we're hitting the top, sweeping the bottom, back and forth, back and forth. So the reason this is important is because it gives context to what happened today. Alright, so these vertical dotted lines here, this is going to be the open and close of today's session, 6:30 my time into 1 p.m. So you can see right off the open, the NASDAQ gave a bit of an opening drive, but we wicked above and we were closing below. So this is indicative of sweeping for liquidity. The fact that we tried 3 times should have given fair enough warning to either de-risk or cut longs entirely. And you can see obviously this led to a pretty significant drop. Down here retesting this Fibonacci extension, but that's irrelevant for this video. And then in response to this drop, we had quite a pullback. And on my Twitter feed and my trading groups, I'm seeing people, celebrating this V-shaped recovery. But here's why it was looking rather bearish. All right, so let's talk supply and demand. There's a couple different ways of identifying these regions of supply and demand, or as ICT, which you'll see some links below about this guy. He refers to them as order blocks, but it's essentially the same concept. You have clusters and single candles. So this one that we came into today happens to be both, right? I mean, this is a cluster of candles, but they're also relatively uniform. So on a higher time frame, this would look like a single candle supply and demand, or demand zone rather. But on lower time frames, you have a cluster here. So let's first just think about this logically. You have the market open. You have people buying this multiple attempts at an opening drive. And then we have this really relatively large dump for NASDAQ anyways. I mean, we're looking at a just about 0.6% drop here. So people who bought around here are underwater for the next 2 hours or so. Price comes back to where they bought and they're given an exit at break even. Wouldn't you take that as well? One more note about what makes this an important demand zone is that we have this up candle for a down move, but it's not any down move. This is a down move that breaks market structure. So market structure, up until this point, had been capped on the downside by this large impulse here. And then we're going to look at these wicks down. We have a break in market structure down here, so we'll mark that out as well. This happens to also be our overnight low. So this is not just any down move. This is not like a down move right here, right? This is a down move that breaks every single down wick since we had this impulse on August 23rd. So this would be classified as a market structure break. And so for that reason, this supply zone here becomes a lot more important than other ones. So let's talk about how we can react to this sort of a false recovery that we had here. We're going to use our Fibonacci extension tool here. And we're going to cap the top and the bottom of this impulse and then corrective move that we had here. In doing so, we can see that a low was created, a bounce was given, and then we swept that low. So what lies down here? This is going to be liquidity. You have stop losses of people who bought this low, and you have breakdown traders trying to short this drop. So we have resting liquidity. So knowing that would have given you a good long opportunity here, but let's say you missed that. What are we going to look for next? We're going to see how price reacts once it reaches this demand zone again. So our Fibonacci retracement, this is what's called a optimal trade entry setup. Optimal trade entry is a concept that you can learn from ICT, Inner Circle Trader. His name is Michael Huddleston. I'll be linking some videos below. But what the optimal trade entry is an entry on continuation moves that give a retracement in between the beginning and the end of it. So we have a swift move to the downside, followed by a bounce. The optimal trade entry region is going to be between your 618 and your 786 Fibonacci retracements. So we have a drop, a pullback right into our optimal trade entry here. This right here is our OTE zone, as he calls it, where you would short a retest of this area, set your stop maybe above the wick up here, so something like that, with the goal of a retest of the lows. So this is a 5-to-1 risk to reward setup, otherwise known as a really fucking good trade. So this is all pretty simple stuff, right? I mean, we're not relying on a ton of indicators. We're just looking at price. We're using a couple of drawing tools, and we're looking at the context of what's happening. Now, one last thing I want to mention here is just in general regarding all trade setups. The best trade setups come out of, or rather the best short setups come out of failed breakouts, and the best long setups come out of failed breakdowns. These are where you want to be looking to establish a position. Say you took a position here, you were longing the bounce. All right, you get this immediate pump, you're so excited, oh my God, I'm printing, and then immediately it's coming back to retest and you're flat or barely green. Then it comes back into where you entered, you're like, oh fuck, I'm back to even, oh my God, we're dumping, I better sell, or maybe, holy shit, we're getting a bounce, I'm gonna make it, right? This is how you trade based on emotions, right? When you're longing or shorting this region, it's really hard to have a solid plan. But when you're longing the bottom or shorting the top, this is how you're able to establish positions that can give you comfort after you enter them, right? Because you have a move swiftly in the right direction, or you have a really quick invalidation. So let me know if that was helpful. Check the description down below. I'm going to be including some links for price action learning materials. All this is free stuff. And thanks for watching, and I'll catch you next time.